Good day everyone, my name is Nurul Syamimi binti Muhammad Syahri. Today I will be presenting a comparative financial performance analysis of two companies in Malaysia's food and beverage industry, which are Nestle Malaysia Berhad and Fraser and Neff Holding Berhad, which is FNN. Financial performance analysis is important because it helps evaluate a company's financial health and operational efficiency. While financial statements provide key information, the figures alone may not be meaningful without proper analysis. Therefore, this study uses financial ratio analysis to better interpret the financial data. Both Nestle and FNN are publicly listed on Bursa Malaysia and operate in the same industry, making them suitable for comparison. However, different in their business strategy and scale of operation may lead to variation of financial performance. This study examines the company financial statement over a 2-year period using data from the annual report. The analysis focuses on liquidity, profitability, efficiency, solvency, and market ratio. In this presentation, I will cover the introduction and company background. Next, I will briefly introduce the background of the two companies analysts in this study, which are Nestle Malaysia Berhad and Fraser and Neff Holding Berhad, also known as FNN. First, Nestle Malaysia Berhad is a leading food and beverage company in Malaysia and a wholly owned subsidiary of Nestle SA Switzerland. The company has been operating in Malaysia since 1912 and was listed on the main market of Bursa Malaysia in 1989. Nestle Malaysia manufactures and distributes a wide range of food and beverage products, including well-known brands such as Milo, Maggi, Nescafe, and KitKat. The company operates multiple manufacturing plants, export to over 50 countries, and place strong emphasis on halal compliance, sustainability, and product innovation. Moving on to Fraser and Neff Holding Berhad, FNN is one of the oldest food and beverage companies in Malaysia. With a history dating back to 1883, the company focuses mainly on beverage and dairy products with popular brands such as 100 Plus, Ice Mountain, Magnolia, and Farmhouse. FNN also has strategic partnership with international companies and operates manufacturing facility in Malaysia and the region, making it a strong competitor in the food and beverage industry.
Good day everyone. Now this presentation will explain the financial ratio analysis for the two companies. The first one is Nestle Malaysia and the second one is Fraser and Neff Holding Berhad, focusing on specifically on liquidity ratio. Liquidity ratio are used to be assessed how well a company can pay its short-term debt when they become due. They help investor or creditor and management understand whether the company has enough asset that can be quickly turned into cash. The first ratio is the current ratio. It is calculated by dividing current asset by current liabilities. This ratio helps show whether the company has enough total current resources such as cash, receivable, and inventory to cover its short-term obligation. Based on the table, Nestle record a current ratio of 0.61 times in 2023 and 0.55 times in 2024. A value below 1.0 suggests that the company may struggle to cover its short-term debt using its available current asset. Meanwhile, FNN's current ratio was 2.95 times in 2023 and 2.46 times in 2024. A higher value, generally above 2.0, indicate good financial strength and more enough current asset to pay liabilities. This information can be useful for supplier in deciding whether they feel confident allowing credit sale to the company. The second ratio is a quick ratio. This ratio shows a company's ability to pay short-term obligations using only its most liquid asset, such as cash and account receivable. Inventory excluded because it often takes longer to convert into cash. The formula is the current asset minus inventory divided by current liability. From the table, Nestle recorded a quick ratio of 0.22 times in 2023 and 0.23 time in 2024. A low quick ratio means Nestle would need to rely on selling inventory or using other resources of fund to pay debt quickly. In comparison, FNN recorded 2.05 times in 2023 and 1.80 times in 2024. This shows that FNN has a strong ability to settle short-term debt immediately using only liquid asset. Quick ratio results are especially important for bank and lender when deciding whether to approve short-term financing for the company.
Next, I will explain efficiency ratio, which show how will a company manage its asset and operation. First, inventory turnover. Nestle Malaysia decreased slightly from 5.80 to 5.22 times. Managing inventory is held a bit longer before being sold. FNN, on the other hand, improved from 4.67 to 4.82 times, showing better inventory management. Next, average collection period. Nestle increased slightly from 35 to 36 days, still expensive. FNN reduced from 77 to 75 days, showing a small improvement. Overall, Nestle collect reviewable more efficiently. For total asset turnover and fixed asset turnover, Nestle remains stronger than FNN, despite slight decrease. Similarly, accounts receivable turnover show Nestle is a more discreet in managing customer debt. In conclusion, Nestle Malaysia demonstrates stronger overall efficiency, while FNN is gradually improving in some areas. Next, I will explain solvency ratio, which measures how well a company can meet its long-term debt and manage financial risk. First, the debt ratio. Nestle Malaysia increased from 81.1% to 45%, showing a 8-year reliance on debt and rising financial risk. FNN, on the other hand, stayed low and stable around 34%, showing a stronger and safer capital structure. Next, interest coverage ratio. Nestle dropped from 44.4 times to 8.4 times, which is has less ability to cover interest expenses, improved from 18 to 19.5 times, showing stronger coverage and low risk. For the debt equity ratio, Nestle increased sharply, indicating 8-year average, while FNN keep a low and balanced ratio. The equity multiplier also increased for Nestle, decreasing more reliance on debt, while FNN remain conservative. Finally, the long-term debt to capitalization ratio show Nestle relies minimally on long-term debt, while FNN is used as well. In conclusion, FNN is in a more stable financial position, but Nestle Malaysia face higher average and greater solvency risk.
Next, we will discuss the profitability ratio focusing on return on asset or ROA and return on equity or ROE as shown in the bar chart. Based on the report, Nestle Malaysia Berhad record a higher ROA than Fraser and NIF Holding Berhad in both 2023 and 2024. Although Nestle ROA declined from 18.49% to 11.39%. This shows that Nestle is still more efficient in using its total asset to generate profit. Similarly, Nestle ROE remains significantly higher than F&N at 97.77% in 2023 and 75.90% in 2024, indicating strong return to shareholder, although the decline reflects increased financial pressure and higher leverage. Moving on to the market ratio, we examine the price to earning or price earning ratio, which reflect investor expectations and market valuations. According to the data in the report, Nestle Malaysia Berhad show a higher market valuations compared to Fraser and NIF Holding Berhad, especially in 2024. This indicates that investors are willing to pay a higher price for Nestle earnings, reflecting stronger brand confidence, stable market positions, and expectations of future growth. In contrast, F&N price earning ratio, although improving, remain lower, suggestions or a more conservative market valuation. In conclusion, based on the profitability and market ratio, Nestle Malaysia Berhad is more profitable and more highly valued by investors compared to Fraser and NIF Holding Berhad. The highest ROA and ROE demonstrates Nestle's stronger ability to generate profit from its asset and equity, while the higher price earnings ratio reflects stronger investor confidence. Overall, despite some declining trends, Nestle Malaysia maintained a superior profitability position and market perceptions relative to F&N.
This table compares the financial performance of Nestle Malaysia Berhad and Fraser and NIF Holding Berhad for 2023 and 2024 across liquidity, efficiency, solvency, profitability, and market ratio. In terms of liquidity, both companies show a slight decline from 2023 to 2024. However, F&N consistently record higher current and quick ratio, indicating stronger short-term financial stability. This is due to F&N conservative working capital management, while Nestle relies more on operating cash flow and short-term liabilities. For efficiency, both firms maintain stable operation, but Nestle outperforms F&N in inventory turnover and receivable management. This reflects Nestle's strong brand presence, efficient supply chain, and effective credit control, allowing faster conversion of sale into cash. Regarding solvency, Nestle has significantly higher debt ratios and leverage compared to F&N, showing a more aggressive financing strategy. In contrast, F&N maintains lower financial risk through a conservative capital structure. Despite higher leverage, Nestle remains capable of meeting its interest obligation. In profitability, both companies maintain stable gross margin. F&N achieve higher operating and net profit margins, indicating better cost efficiency, while Nestle record higher returns on asset and equity due to the leverage effect. Finally, market ratios show that Nestle command higher price to earning and price to book ratio, reflecting strong investor confidence, while F&N offers higher dividend yields, appealing to income-focused investors. Overall, Nestle emphasizes efficiency and shareholder return through higher leverage, whereas F&N prioritizes liquidity, profitability margin, and financial stability.
Based on the financial analysis, both Nestle and F&N demonstrate a strong financial position, but Nestle performs better overall. Both companies maintain liquidity ratios above 1, showing they can meet a short-term obligation. F&N exhibit higher liquidity, reflecting a more conservative approach, while Nestle manage its working capital more efficiently. In terms of operational efficiency, Nestle outperforms FNN with a higher turnover ratio and faster collections of receivables. Looking at capital structure, Nestle relies less on debt, resulting in a lower financial risk, where FNN depends more on debt financing. Regarding profitability, Nestle records high return on assets and return on equity, providing better return to shareholder. Meanwhile, FNN shows stable but lower returns in terms of market evaluations. Nestle enjoys higher investor confidence, while FNN more moderated dividends return. Overall, Nestle Malaysia Berhad is financially strong due to its superior efficiency, high profitability, and lower financial risk. That's all from us. Thank you.